Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 383 on July 11th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Cipher Mining Inc., Cleanspark Inc., and Marathon Digital, and we discuss three new trades on the AdvisorShares Trust Pure U.S. Cannabis ETF, SoFi Technologies, and Joby Aviation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets finished the week lower, but still hovering near all-time highs, so keep that in mind. The Dow Jones Industrial Average lost 457 points, closing the week at 44,371 points. The S&P 500 index lost 19 points, ending the week at 6,259 points. And now it's time for the topic of the week. The topic of the week is learning. This is a big topic for me. Have you ever gotten to the point that you really feel like you know a lot? You've been doing something for a long time and you truly feel like an expert. It seems like whenever I get to that point, I start to slip on the little things. I keep all of the big things in place, but the little things tend to catch up on me. And it's almost like I start taking my knowledge for granted. The thing that helps keep me balanced and focused is to keep learning. When I keep learning, I keep reminding myself that there's still more for me to learn. Yes, you may be an expert, but you might find that there's another way of viewing something that expands your expertise even more. There's so many different aspects of option trading that I can always keep learning. I don't talk about the Greeks on the show, but that doesn't mean that I don't ever use them in my trading. I don't discuss volume metrics or volatility or several other aspects of trading options on this show. There's always more for me to learn. I know a lot, but there's always more to learn. And if I want to continue getting better, I have to keep learning. There's a practical side to learning as well. I can't only learn by studying theory. I test things in the market in real time, and I put things into practice to see how they do, what the outcome is. I'm constantly adapting my trading style based on what I've learned. So if you want to stay sharp, if you want to keep getting better, you need to keep learning. So that's it for the topic of the week. Let's get into the review of last week's trades. We're going to start off with the covered call on Cipher Mining Inc., symbol C as in Charlie, I as in India, F as in Foxtrot, R as in Romeo. At the time, the stock was trading for $6.05 per share. I looked at buying stock and selling the July 6 half call at 40 cents, hoping for a return of 14% in the next 2 weeks. Well, shares of Cipher Mining lost 18 cents, closing at $5.87 per share on Friday. The call option we sold lost 25 cents, leaving us with a net gain of 7 cents if we were to close the trade out immediately. Now, we are still slightly above our break-even point, so there's no need to make an adjustment at this point. However, we are in expiration week, so at this point, I would likely plan on letting this call option expire worthless and then selling another call option in August to capture more profit and cushion against any future losses. Now, of course, I could close the trade out immediately for essentially flat or, a small profit, just to prepare for new trades in August and start the slate clean. Now, the August call option is selling at 80 cents right now, and there's still 15 cents more depreciation on the table with this July call option. But if you want it, you could move straight into August by buying back that July call and then selling the August 6 call at 80 cents. Either way, you're collecting new premium to keep this a highly profitable trade, especially relative to the cash outlay that you spent to buy the stock initially. So this trade is still working out, even with the stock being slightly lower. Do the math and decide what makes the most sense for your portfolio. For me, no adjustments are needed. Next up, we have the credit spread on Cleanspark Inc., symbol C as in Charlie, L as in Lima, S as in Sierra, K as in Kilo. At the time the stock was trading for $12.25 per share, I looked at selling the July 12 11 half put spread at 19 cents. That could give us a maximum possible loss of 31 cents per spread. Well, shares of Cleanspark grew 40 cents, closing at $12.65 per share. The out-of-the-money put spread that we sold is now even farther out of the money, and that's a good thing, especially with just 1 week left until expiration. Now, we want this stock to expire above $12 per share, and for this put spread to expire all the way to zero, depreciate all the way down to zero. So no adjustments are necessary at this point. Definitely keep an eye on the stock over the next week and be prepared for any possible expiration week shenanigans. We know there's lots of those that can happen. This trade is working out so far. I'll be keeping an eye on it just to make sure that it finishes in the money. Actually, in the profit. I want it to expire out of the money. And our last trade from last week was a debit spread on Marathon Digital, symbol M as in Mike, A as in Alpha, R as in Romeo, A as in Alpha. At the time, the stock was trading for $17.66 per share. I looked at buying the July 17 half call spread for 30 cents. That could give us a maximum gain of 20 cents or a 66.67% return in 2 weeks. Well, shares of Marathon Digital grew $1.48, closing the week at $19.14 per share on Friday. The in-the-money call spread that we bought is now even more in the money, and that means this trade is looking like a winner too. Now, as we enter expiration week, just be aware that the stock can become more volatile than usual. So if you get a chance to lock in a decent amount of profit, do so. I wouldn't hold a trade for a few more pennies, but that being said, this short-term trade appears to be paying off, so no adjustments are needed at this point. Now, this upcoming week is the last week of trading for the July monthly option contracts. Friday, July 18th is expiration for all monthly options in July. All new trades on today's show will use the August 15th expiration for monthly options in August. So let's dive into the new trades for this week. We're going to start off with a covered call. I'm looking at the AdvisorShares Trust Pure US Cannabis ETF, symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. Stock ended the week at $2.93 per share. I'm looking at buying stock and selling the August 3 call at 31 cents, hoping for a return of 12.97%, roughly 13% in 5 weeks. Now you enter this trade by buying stock for $2.93 per share and selling the August 3 call at 31 cents. This trade makes the most money if stock prices finish above $3 per share. The break-even price on this trade is $2.62 per share. In real terms, the stock purchase will require $293 and you'd collect $31 for selling the option. Next up, we have the credit spread on SoFi Technologies, symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. The stock ended the week at $21.20 per share. I'm looking at selling the August 21/20 put spread at 44 cents. That could give us a maximum possible loss of 56 cents per spread. You enter this trade by selling the August 21 put at $1.66 and concurrently buying the August 20 put for $1.22. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $21 per share. The break-even price is $20.56 per share. In real terms, you'll receive $44 per spread that you sell and have $56 at risk. And then our final trade on today's show is going to be a debit spread on Joby Aviation, symbol J as in Juliet, O as in Oscar, B as in Bravo, Y as in Yankee. Stock ended the week at $12.01 per share. I'm looking at buying the August 11/12 call spread for 55 cents. That could give us a maximum gain of 45 cents, or that's 81.82% return in 5 weeks. Now you enter this trade by buying the August 11 call for $1.75 and concurrently selling the August 12 call at $1.20. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $12 per share. The break-even price on this trade is $11.55. In real terms, You'll pay $55 to enter the spread, and your maximum gain is $45 per spread. So that's it for this week's show. I'm posting it late on Friday just for those people who tend to wake up early on Saturday morning thinking about option spreads. So hope you guys have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.